So let's continue talking about the process of recording economic events. And again, as we've mentioned, there is a system, right? We need to collect some data, we need to process that data, and then in the end, we need to be able to communicate that information to decision makers, whether they be internal to the company or to the public, to creditors and investors. So again, transactions are economic events, right? Not all activities are transactions, right? Assets, liabilities, or stockholder equity items change when some of these economic events occur. Now, the system that we refer to is something called the dual effect accounting system, right? It's a dual effect. Every transaction requires at least two numbers to be recorded. We're going to look at the accounting equation, and maybe that will make things a little bit clearer. So the accounting equation says assets are equal to liabilities plus stockholder equity. So when an event occurs and we record that, if you kind of draw a line here at the equal sign, we have to have a line item, right? Here's transaction one. Transaction one is going to affect at least at least two accounts or two lines, two columns, if you will. It's going to affect at least two of them. And we'll talk about how that works as we go through some examples. But you just have to keep in mind that the dual effect implies there's a balancing of the information, right? One side is always going to be equal to the other. So assets equals the combination of the other two sides. How we ultimately work this out with income then is the equity section has two parts. Common stock is the money that's been paid to the company by shareholders. That's their investment in the company. Retained earnings is a representation of the profits of the company that have been kept, right? So when a company has profits, it can decide what to do with those profits. It can pay them out to investors in the form of dividends, or it can keep them and reinvest them in the assets of the firm. So retained earnings essentially represents the reinvested profits of the company. So let's see if we can go through some of these typical kinds of transactions. Again, what I'm going to remind you is we need to separate the two sides here. So here we have cash of $10,000 was invested in this company by investors for common stock. So what does that mean? The company received $10,000. If the transaction affects things on either side of this equal sign, then you'll notice that they're always going to have the same sign. So that means what? We received cash, and that's represented by the ownership in the company of $10,000 in common stock. So what's next? Again, keep in mind this equal sign. We borrowed $5,000 from a bank at 12%, and we have a $5,000 note payable. So what? We now have $5,000 more dollars in cash, and $5,000 is represented by this liability. Notice what? The same signs on. If they're on opposite sides of the equal sign, they'll be the same signs. That makes it equal, right? You look at this. What's the balance here? 15,000. What's the balance here? 15,000. So we're balancing this statement every single time we make a transaction. Now we purchase some equipment with some money. So we paid $5,000 for some new equipment. And here's our equal sign. Well, now we know what? We got rid of $5,000. We used $5,000. We spent this, and we purchased some assets, right? So what is it? So we have 10 plus 5 is 15, minus 5 is 10, plus 5, 15,000. What's it over here? 15,000. Okay, again, we're keeping things in balance. $12,000 was a cash advance from a client. They paid us ahead of us doing the work, right? Again, here's our equal sign. So we know what? We got $1,200 in cash. Where do we record that? Well, we received money for work we haven't done, so this is what we refer to as unearned revenue. Again, it's positive because, right, it's a positive amount. There we go, $1,200. Again, what's the difference? Now it's 16.2, 16.2. Next, we received $10,000 in cash for services that we provided. Again, right, we got cash, $10,000. How do we record that? Well, it's recorded over here under shareholder equity. This is the revenue that we received, $10,000. Again, keep in mind, I'll keep repeating this till it gets crazy for you. On both sides, they're always going to have the same sign. Next, we paid office rent. Cash went out the door of $900. That's an expense. We have to show it as a negative number. Negative, negative, right? We're still in balance. We paid $600 for an insurance policy. Well, we paid $600, right? But what did we get? The insurance is going to be good for a year. So we have what's referred to as prepaid insurance. We paid $600, and we have this now asset of $600 that represents our insurance that we're insured for the next year. Notice what? They're on the same side of the equal sign, so they have opposite signs on them. We have 3 months of supplies on account, right? So how do we get that, right? So we have supplies. We got $2,500 with supplies. How did we get them? We didn't pay cash. We borrowed for it. So again, look, plus, plus, 2,500 on each side. Again, both sides are still in balance. We hired 4 new employees to begin work. Well, that is not an economic transaction, right? I mean, having a meeting about business, that's not an economic transaction, right? So there's nothing to record for this particular event that happened in the company, right? It needs to be an economic event. We paid a $500 dividend. Cash went out. Again, sorry about the line. Cash went out $500. That means dividends went out for $500. Again, notice what? On opposite sides of the equal sign, they're going to be the same signs. For employees that have worked 2 weeks, they've earned $4,000 in salaries. Again, these were paid on October 26th. So what? Sorry about the line again. Minus 4,000, minus 4,000. So now we've gone through a series of transactions. Now you can create the balance sheet and the income statement, right? The income statement is created here, and then the balance sheet covers, right? Retained earnings is part of the balance sheet. These other line items, this would be the totals of your assets. These are the totals of the right-hand side of the balance sheet. So essentially what we've done, we've created a very simple way to record events. We don't have to get all worried about debits, credits, all that other stuff, but we now know how we can create the income statement, the retained earnings statement, and how we can ultimately then create the balance sheet. Very simple process, right? So let's not try to overthink this accounting thing, right? It's not that difficult when we're only thinking about this accounting equation. Look forward to chatting with you again. Have a good day.